Before we get going, will you please check and make sure you are subscribed? I don't want you to miss one video. Each of these can make you money.
Hello, welcome to the Trading with Ashley show. We have some wicked weather going on in my part of the country, so I hope any of you in the South are safe tonight with all this crazy weather. But I wanted to talk to you about tomorrow and offer you a trade idea that might really help you with everything we have going on. So tomorrow we have Chairman Fed Powell speaking. Now, I want you to realize that for the last 3 or 4 meetings that he has spoken, the market has, based on the put and call ratio, they have expected a move of about 3% by the end of the week after he speaks. So he can really move markets. But something is interesting this time. The move is not expected to be quite as large. And so I'm going to show you the data. I'm actually going to give you the potential strike prices that we may see on the SPY and the Qs so that you can potentially build some trades around it based on how the market may move after he speaks. It's always very interesting when you watch. You can even watch, have the market open, watching the candles while he's speaking, and certain keywords cause the candles to spike or drop. It's actually very fascinating. But to help you on learning how to trade this, I am going to be teaching you how to do an iron condor. It's a funny name, but I want to make sure you fully understand it. So I asked for some help from one of your favorite guests, my daughter Landry, and you're going to see where I am actually teaching her how to construct this trade. So hopefully it helps you. You can make a little money off of it. If not tomorrow, then one day in the future. All right, let's go into the computer and get started.
Hello and welcome to the Trading with Ashley show.
Are you Ashley?
I am not Ashler.
What's your name?
I'm Landry.
This is my counterpart. You have all requested for my daughters to be in more videos because it helps you learn. So Landry has agreed to be in this video today.
Yep, anything I can do to help you guys learn more.
And you're learning too.
Yeah, and I'm learning right alongside with you. So it's a win-win. So
yes, awesome. I love teaching, and it's more fun when you have somebody sitting right beside you that you can teach. Oh, yeah. So what we're going to learn today is really cool. So we are going to learn how to trade the SPY using an iron condor.
I feel like I'm performing magic tricks right now.
Let's talk about I know that sounded intimidating, but let's break it down. How many companies do you think are?
I think it's 500 companies. Really?
Okay. You would be surprised on how many people get that wrong.
What, really?
Yeah.
What are they, the 500 things?
Yeah. The SPY is the S&P 500. So the reason that traders like to trade it is considered to be less volatile than a single stock. When I say less volatile, what do you think I'm referring to? If volatility's high versus volatility being low, what do you think a stock that has high volatility, how it behaves versus a stock with low volatility?
I think that the low volatility is going to be more like a safe bet, and it has I think it's more of a safe bet, and then it gives a less return on your investment, kind of.
It does. It also has smaller swings.
Okay.
And so you're familiar with the Bollinger Band. We've studied that and talked about that a lot. And when that band expands really wide, that's because there's high volatility.
Okay.
So it can swing really high, but just as anything that goes really high, it can come down really far. And so ideally, when you're trading, especially if you're wanting to be a little bit safer, you want to trade on a stock that has a lower volatility. Now, why do you think that the SPY would have lower volatility than, let's say, a single stock like Tesla?
I think because it has so many companies underneath that umbrella, that's why it has a low volatility.
That's right, because it's a blended movement of it. And so that's why a lot of people like trading the SPY. And when I talk about an iron condor, I know we haven't discussed this or ever traded this.
No, so yeah, I feel like something's about to spawn and come attack me or something.
What do you think an iron condor is?
I mean, it sounds like something really tough.
Okay.
It sounds like something. I don't even know where to begin. It sounds like a mythical creature, like an iron condor.
Okay, so we are going to learn how to trade both ends of the SPY, but you want to be strategic with it because you want to increase your chances of winning. And there's one really cool thing that happens when you trade an iron condor that increases the chances of you making a better return. And I'm going to show that trick to you. It's so cool.
All right.
And the best part about this, Landry, is this works with smaller accounts. So when I teach selling options, normally I'm talking about 100 shares of a stock, right?
Instead, enough money for 100 shares of the stock you're selling a put on, we add a trade to it that only requires you to have enough money for the difference between the two strike prices. Okay, here's the expected move that I was mentioning to you. It looks like on the SPY that the expected move is 2.3%. And it looks like that would put the price up or down, going from where we are now, 558 to 571.65, or the price down to 545.95. So we'll keep that in mind. And then for the Qs, it looks like the current pricing at 481 and expected move 2.7%. The Qs always move a little bit more than the SPY itself. It's a little bit more volatile, offers a little bit more premium. And so with that, you are looking at potentially the price up 494.41 and the price down 468.41. Those are our levels. We will go look at potential trades using those as our iron condor anchors. I'm on the SPY option chain and I am looking at 5.9. And the best thing about trading the SPY and the Qs, you can enjoy doing daily trades if you wish. And once you get more familiar with it, that's something you might want to do as part of your daily income. And so what you want to look at, we started with 545.95, and you can see that strike price right here. It's got a decent delta. It's the 0.15 delta. So there's only about a 15% chance it'll land here. But I actually like to make my trades a little bit safer than what's listed here. And this is interesting because you see right here, there's 14,000 volume, 11,000 open interest, and that is the largest of any of these amounts around 545. So what I like to do to make my trades a little bit safer, I like to line up behind where all the volume and open interest is. Because if it does start getting down to this level, these orders start to trigger could have the effect on the price where it pushes it back up. So that helps me just be a little bit safer. So for the opening part of the trade, I am going to be selling the 544 put. Okay, now we have to add the other end to it, and that's the purchased put side. So what this means, if you're not familiar with selling and buying puts, when you sell a put, you're agreeing to purchase this ETF at 544 if it lands here. But if you don't have enough money to actually cover that, then you can buy a put, which is going to allow you to sell that ticker symbol at the price that you purchased the put at. So that is the protective part of this equation right here on the Iron Condor. We are filling out the put credit spread portion of the Iron Condor. If I want a $5 wide spread, which would take about $500, because what you do is you subtract this strike price right here, 544, minus the strike price on the purchase, that's 539, and that equals 5. So 5 times 100 is $500. That's how much money you would need to put this on. So this is the one I am going to buy. And the reason I'm buying this one and selling this one is the one I'm selling is more expensive, 107. The one I am buying is less expensive, it's 60 cents. So that's creating the credit on my put credit spread. Now it's time to go to the other end to fill out the call credit spread portion. 571 was the expected move. And as you can see right here, it's still a decent delta. It's 0.15. But again, I like to be just a little bit safer than this one right here where the expected move is. So with that being said, I'm going to start this trade at 572. It's a little bit safer, 0.12 delta. This is the one that I will be selling. Now I'm going to do a $5 wide spread on this end as well. So that is going to land right here at 577. I'm going to buy this one. So you might think, okay, 500 on the put side, and you might consider that they're going to require 500 on the call side, but that's the best put of the Iron Condor. Let me show you. So once you send this to a ticket, this is what it looks like. I populate it with one contract for each of these, and then I'm doing a net credit because I'm receiving a credit for this trade. Now, right here, you can see it's listed that the midpoint is 0.94, but consider if you were to set this up tonight for it to execute tomorrow, there's going to be a lot of upward and downward movement. So you can actually put a price in here. I'll go ahead and put $1. And then when you select preview here, you're going to see it all put together. Now, remember I said that it's 500 because it's the spread on each side, but that's the best part about the Iron Condor. So your broker realizes that you cannot lose on both sides of this trade. Ideally, for this trade to win 100% of this $100 that you'll be receiving, it will land right here in the middle. So it will land in between 572 and 539. If so, then you'll get to keep 100% of the credit received. But because you can't lose on both ends of it, the broker only requires you to have enough to satisfy one side of the trade. So you can actually get more premium this way when you do an Iron Condor. So in this scenario, it's showing $100 is the credit. It's saying that the cost is $400, but that's only because we're getting this credit. It really is going to require the initial $500 to put it on, and then you get the credit. So let's calculate our return on this trade, and this is what makes these trades so valuable to those that are putting them on. The way you would calculate it is you would take 100 and you would divide it by 500, since that's the initial amount to put on the trade, and that equals 0.2. You multiply that by 100, and that equals 20%. So you would be making 20% off this trade in just a few days. If you were to put on one of these trades a week for 52 weeks, you're looking at an impressive return. It's over 1,000% return, which is not realistic to do this daily and win it every time. You would have some losses, and you wouldn't want to put a lot of capital behind these because you could win several in a row, and then you up the ante and you end up losing, and that would wipe out all of your gains. So you definitely want to use risk management with these trades. And speaking of risk management, what you might want to consider is if one of these sides is tested over the next couple of days, then you may consider actually shutting down that end of the trade just for safety. And you don't have to shut it all down together. You can. But what I like to do on these Iron Condors is if it is kind of hanging out in the middle and it never breaches either side, then that usually works in my favor, because if it's close to 572, then I might close down this end of it because it'll be in great profit, and then wait for it to retreat. And once it retreats, then I close down this end. And that way I can ink out a little bit more profit. And now that you fully understand how to do this, let's go look at how we might construct this on the Qs. When I constructed the Iron Condor for the Qs, I actually was more conservative than I was for the SPY, because this is heavy in tech stocks, and that means that it is more volatile. So I wanted to be a little bit safer, so I put more room in the middle for this trade. But you can see here, it has very similar dynamics. It looks like if I put in my limit order, I would get $100 in credit, and then I'm risking $400 because I did receive that $100 in credit. And so if you are going to put on this trade, then you would want the Qs by the end of day Friday to stay between 496 and 462. Again, if this was breached, or it looks like it was going to be breached, then you might do a measure of safety and close down the side potentially that would be breached. But if it is going to hang out in the middle, then you could selectively close down each side of it when the timing was most in your favor.
All right. Well, thank you, Landry. I'm sure everybody appreciates you being a part of this to help them learn.
Thank you for having me back on.
Absolutely. I'll keep having you back on.
Perfect.
All right. Thank you.
Yeah, of course.
All right.
I love you.
Happy trading, everybody. Remember, if you're with me, Trading with Ashley, there is no trader left behind. Now, I hope you found that helpful, and it's something that you can use to learn how to trade. We're having so much fun in my community. Everyone is just really busy throwing out trade ideas, and we're all learning and growing together. I've really been having a lot of success with a lot of my members that are starting to pick up this trading thing really fast, and they're making really good money. If you're interested in joining us, there is a link below. You book a brief call, and then we will interview you, see if you're a good fit for the community, if it's something you'd be interested in, and then we will welcome you with open arms. All right, if you're with me, Trading with Ashley, there is no trader left behind. And if you liked learning from me teaching my daughter Landry, I'm going to post another video where I'm teaching her, and maybe you can pick that up as well. You're going to see that video right here.